Hi, Aga. Yeah, it's not this kind of chat, but hey. Okay, so maybe I'll wait 2 more minutes and then I'm going to start. Please, anyone, if you have a question, there's a chat down that you can write your questions. So I'm going to start like in 2 minutes. Just 2 more minutes because some people asked me to wait a couple of seconds. Okay. Okay, Tai, so let's begin. Nod with your head if you agree. You can hear me, you agree? Okay, so guys, thank you for coming. This video chat is gonna be about investing, and it's gonna target immediately the period that we're talking about right now, which is what's going on in the world with Corona. Down you have the chat that you can write any question. Maybe if you want, you can wait until the end, or if you have a question regarding one of the slides, feel free to ask, and I will do my best to answer the questions that you guys might have. So just a little bit about myself. This is me. This is not me. I used to manage in Australia. I used to work on Wall Street. I used to manage $50 million for clients. Even now, I consult certain hedge funds regarding investing. You can follow me on Twitter. There's a lot of, I don't know, influential and other people on Twitter that you should also follow. I have a lot of followers, from professors to other stuff that are interested in what I do. I've been an investor for many years, and obviously this is not so good. So maybe because of this, you shouldn't listen to me, but that's what it is. Just 1 second. Okay. So I'm going to start with a little bit of basics because I know not everybody knows exactly what the stock market is. So I'm just going to give some basics, and then I'm going to move a little bit more to the trade ideas, what you should do, etc. Okay, so I don't know what's this. Okay, I don't know what this is, but whatever. Okay. So first of all, let's begin with what a stock is, because we're going to deal a lot with stock markets. So let's understand what a stock is. A stock or a share, you probably heard that word a lot of times, is just a very small part of a company. So for example, you know, if we take, for example, Facebook or Google, all of them have shares and the companies are worth billions. But you, as an investor, can buy one share. If I gave, for example, below we have, 1 second, below we have an example of Nike, and you know, the shoe company, and you can buy Nike stock right now for $82. And if you bought one stock of the company, you basically became a partner of, I will post my Twitter account towards the end. So here, for example, 1 second, so here, for example, we have a part of Nike, and every time you buy a small share or stock, you become a small owner of the company. And a lot of people want to know, so how do you make money by buying stocks? And now we're going to go to the next slide. So first of all, let's understand what the stock market is. Usually the stock market used to be a place where people used to buy and sell, and they used to talk with themselves. That was like 60, 50 years ago. Right now, the stock market is pretty much all electronic. So every time you have a stock and you want to buy or sell, there's millions of people that are going to buy or sell from you the stock. Usually when people ask you, what is the stock market doing, what they pretty much mean is what the S&P 500 is doing. Why is that? Because the S&P 500 represent the stock market. The S&P 500 is an index that includes the 500 largest companies in the US, and they represent the stock market. So every time someone asks you, yo, did you see the stock market? what they're basically saying is what happened with the S&P 500 or the Dow Jones 30, which is the 30 largest companies in the US. Feel free to ask questions at any time in the chat. So how do you make money in the stock market? Like why do companies' prices go up and down? And I'm going to use a lot of Nike here, just so it's going to be easier to understand. So usually when you buy a stocks and good things happen, the price of the stocks go higher because remember, a stock is just a part of a company. So if a company is doing good, for example, if they had good earnings or if they made good deals, people are going to be willing to pay more than you paid for your stock. So they're willing to buy it for a higher price. Your stock is trading on the stock market. Let's take for an example, and I'm going to show a chart pretty soon, is let's say you bought Nike 2 weeks ago. A week ago, Nike came out with some good news, which made the stock jump. So if you bought Nike, like we said before, 2 weeks ago for $72, now people are willing to buy it for $82, and you can decide if you want to sell to them or not. The selling and buying is very easy, and we're going to go and explain more forward how it's done. There's another way to make money from a company. Let's say I bought a share of Nike, and Nike gives dividends. What dividend means is, let's say Nike made $1 billion this year, and they're deciding to give $100 million to the people that invested in the company. You are being one of them, so they're going to give you a dividend. Usually companies that don't grow a lot give you a lot of dividends because they don't have what to do with that money. But companies that do grow, like high-tech companies or Google or Facebook, they're saying, well, we have better things to do with our money than give it back to you. We're going to invest the money in our company because we know it's going to be better for you. So there's two types of ways to get money, or the company goes up in value, or you get a dividend. A dividend is a cash, and usually get it to your account. You don't have to do anything. The company just gives it to you, and it just appears in your account when they give it. Usually companies give dividends every quarter. So if we take Nike as an example, So if we take Nike as an example over here, you see that the stock was down. Then we had some good news. Also, the stock market went up, but let's say we just had good news and the stock price went up. So if you bought Nike over here at $72, now you can sell it for $83 and make $10. If you bought 100 stocks of Nike for $8,000, then you're going to be making a lot more money. Then you would be making $100 in a very short time. So that's an example of how it works. Now I'm going to start talking a little bit more about what's going on now in the stock market. And the weird thing about the stock market is that the best time to buy stocks is when you don't want to buy stocks. I know it sounds a little bit weird, but we're going to get into it a little bit more. And the best time to sell stocks is when everybody loves stocks. And we have in front of us, this is the picture of Warren Buffett, which is considered probably the best investor ever. So yeah, by the way, I'm looking at the chat. If anybody has any question, please ask me, and I'm going to be more than happy to help. So once again, let's go back to this phrase, be fearful when others are greedy, and be greedy only when others are fearful. And we're going to touch a little bit more now why this is a smart thing to do. So first of all, let's look at other things that we recently saw. I think you can remember pretty much that not too long ago, we had Bitcoin at 20,000, 15,000, and probably your mother told you, you should buy Bitcoin, you're going to be rich. And we all know how that ended. You had promoters, I had club promoters that told me that I should buy Bitcoin because it's obvious that it's going to make me a millionaire. But there is a reason that not everybody is a millionaire, because it's not easy to be a millionaire. And if it was easy to be a millionaire, then everybody would do the same thing. Since everybody mostly do the same thing, and since most of the people are not millionaires, the reason is just because it can't be possible that everybody's going to be a millionaire. So I think we can all remember that Bitcoin was going to $100,000. That was when Bitcoin was at $20,000. I have a lot of friends that bought Bitcoin at those prices because they were sure that it's going to go to 100,000 to 1,000,000. And it's very important to look at the media and what the media is showing you, because the media always like to hype stuff. But usually when your grandmother asks you if about a certain investment, this means it's time to run away and sell that investment. Because the moment something is in the front of the newspaper, all the smart money is already going out. And the stupid money, which is mostly you guys, are coming in and they're selling to you guys the dream while they made the real money. Another example, if we can all remember, in 2018, I don't know if you guys can remember, the big deal was weed stocks, weed, pot, hash, whatever you want. Everybody told you that this is the big next thing and you're gonna be a millionaire and a billionaire if you invest in weed. Uh-oh, and what happened? Let's look here. Tilray was one of the biggest weed companies. So here you can see the smart people bought here. And here when it was around $100, $150, all the stupid money came in. Everybody and your mother told you that this is the right time to buy weed because it's in all the newspaper and everybody talks about it and it's time to buy. No. If you bought just a little bit more than a year ago, if you bought into that hype of weed, you went from $150 investment to $9 investment. So that's really bad. So just to recap, what I'm saying is you make the big money by doing what everybody else is not doing or what everybody else is scared of doing. And this is why I think Corona times are good times to invest. So now we're going to go to the second slide. Once again, so how do you learn about information before your grandmother? Look, this is really hard. This is for people that are not in the business. It's hard for them to learn where to get good ideas. Usually you can get good ideas when you get small thing in the newspaper. Maybe in the back page, you see a small kind of news that says, hey, weed stocks are starting to go up or stuff like that. In everyday life, I'll give you, for example, if anybody, yeah, I'm recording this. I'm definitely recording this. So the ideas come from also everyday life. You use Facebook all the time, right? So if you invested in Facebook 5 years ago, you would have made a lot of money. It wasn't in the news. Actually, most of the brokers, when Facebook came out at $20, most of the brokers told you, do not buy it. It's just a fad. They're not going to survive. And we can all see how well that worked. So, like TikTok, for example, online commerce, and all that kind of stuff that you used to use 4 or 5 years ago when it just started, that's a good way to make money. And what also you can do is you can follow smart people on Twitter. And I also get a lot of my investment ideas from Twitter to get investment ideas. Another way to get investment ideas is you can check what Warren Buffett is buying. For example, a lot of stocks that Warren Buffett bought, for example, the airline companies are now 70% less than what he bought them. So that might be very interesting. All hedge funds is what the really smart people are. Hedge funds and investment funds are doing is public information. Hedge funds have to report every quarter everything they're holding. So for example, now you can buy stuff that the smartest people in the world have been buying a quarter ago or a year ago at discount prices. So looking what the smart people do, and I'm going to put the website later on. For example, I'm going to write it right now in the chat, gurufocus.com. This is a free place where you can see what the smart people have been buying, and you can start your research there. And you can see, oh, well, this guy is really smart. I heard about Warren Buffett. He bought Teva, for example, and they're now 50% down. He bought American banks, and they're now 40% down. Maybe I should buy one of those companies. I think another good example, for example, which companies you like and they've gone down a lot is you can think about companies that you use. Guru Focus. That's where I wrote Guru Focus. So Guru Focus is where you can see what the big hedge funds are buying. It's gurufocus.com. Yes, correct. Exact. No, guru. Guru, not guru. Guru focus. I'm writing now in the chat. If I misspelled it, guru focus. I'm gonna go back to that. I'm gonna post all this information, but it's called Guru Focus, and you can find it over there. I think it's .com. So yeah, so you can copy. There's a lot of people. Thank you very much for that post. So I'm just gonna put that website on so people can see, just so we can go over this here. So I'm gonna close this here. So here you can see Warren Buffett rules for picking stocks. Perm Wasta, like all this, you can see all the stocks that very smart people are buying. So this is a very good place to start looking for ideas. You see, for example, here I can see what, for example, Third Avenue. Everyone can see it. It's public information. Hedge funds have to report. No, okay, so this is different because here you have someone that is very smart that is buying. It's, yes, you can see it, but he's buying now. So he's not buying, he's not selling to you when he's buying. Usually these people, usually hedge funds, when they buy stocks, they don't buy them for 2 months, 3 months. Usually you like to hold stocks for a couple of years. So this is good reference. So it would be a good way to go right now and look what smart people have been buying. Like over here, you can see Carl Icahn, you know, what he's adding, Third Avenue Value Fund. This is all billionaires. You don't get information before Buffett. The only way for you to get information before Buffett is things that you're currently using, like Facebook, or if there's another new app or something like that, or some other fad or some other thing that you, I don't know, that people that he doesn't understand, or you think that you understand and other people don't understand. But I would not try to come out with my ideas from nowhere. Even that I have a lot of experience, I start to do my research based on other people's research. I don't buy because someone else is buying, but that's a good reference point to start reading what he's buying. If it makes sense to me, I also buy it. Just because you see that in a lot of cases, all this thing that, you know, like all these guys that you're seeing right now, let's see, for example, the gurus, latest gurus picks, just for example. Here you can see what all the smart people are dying. Carl Icahn buying Hertz and stuff like that. Prem Watsa, Warren Buffett is buying another airlines. So it's not important to be the first one. It's not a competition. It could be that you're buying something after Warren Buffett bought it and it went up 10%, and that's fine. It's not a problem. Warren Buffett buys companies because he believes they're going to be good for the next 10 years. He does not buy them for 2 weeks and you're late to the party because Warren Buffett bought them, you know, 2 weeks before you. It's not that kind of thing. Yes, it also tracks when they sell. That's correct. It tracks when they buy and when they sell. The problem is that there's a delay. So it could be that if he sold today, you're going to only know when he sells in the next quarter. So yeah, so this is another thing. You're not going to know it's the same day that he sells. So, okay, so how do you read stock names? Stock names, yeah, okay, that's a good question. So what you do is you go to Google Finance, you see stocks and companies, you have 2 ways to track a company. You go to Google Finance and you have 2 options. For example, let's do it. So there's 2 ways to look for stocks. I can write, Okay, so there's 2 ways to look for stocks. You know, you can just put the ticker over here. I can put, I don't know, let's say McDonald's. So McDonald's, every stock has a 3 or 4 letter acronym. McDonald's, for example, is MCD, etc. But once again, let's avoid this one thing right now because I want to get to a certain point. Yes, the stock market is the same in every country. It's usually a 3-letter word. But in all countries, the letters are in English. If I'm not, Kamada, okay. No, you know what? No, okay. But listen, let's continue a little bit, because I think for most people, it's not efficient to buy individual stocks because there's a lot of work to be done, and I want to more get to the point of ETFs. So let's get more to the points of ETFs, and we can continue from there. Okay, how do I do this now? How do I go back to this? Tai. Now I don't know how to go back to this crap. Tai, how do I go back to this? Oh, okay. Where's my PowerPoint? Oh, okay, thank you. Thank you, Doron. Okay, so back to the presentation. Why do I have these lines on my, okay. No, well, you know, it depends. It depends. You can, someone is asking me if they should invest in the Israeli stock market, and it's a little bit different. It has nothing to do with the American stock market, but you know, you can invest in the American stock market. How do I cancel screen draw? Okay. Anyways, okay. Okay, so let's go back to this thing. So how can you buy shares? I'm going to continue with this, and then I'm going to answer some more questions. I don't know why I'm drawing on my screen. I don't know what's happening, but whatever. Anyways, okay. So how can you buy shares? There's two options to buy stocks. You can just go to your bank. I think the minimum you need, you can start even with $500, and you can go to your bank and you just tell them, hey, I want to buy some stocks, I want to buy some ETFs, and they're just going to do it for you. The problem with doing it with banks is fees. Fees are very high with banks, and banks also charge maintenance costs, which is bullshit because they don't really do anything. What I recommend is here. So I'm exactly touching about the spot of where you should start investing. So there's two options. First of all is your bank. You can just go to your bank and tell him, hey, I want to start investing in stocks. And he can direct you. He's going to tell you, oh, no problem. We're going to open an account for you or anything else. Or you can use a discount broker. This is what I do, and this is what I recommend to do. A discount broker is a broker that charges very small fees in comparison to the bank. And a lot of them don't have maintenance fees. My favorite one, and we're going to touch about it later, is Interactive Brokers. Just wait until the end. Yeah, Robinhood is great. If you're an American citizen, do Robinhood. But if you're not an American citizen, you cannot do Robinhood. So do Interactive Brokers or any other discount broker. I'm going to touch it towards the end. So I'm just going to continue. So the difference is bank account is very easy because the bank already has access to your money. So they just transfer that to their own brokerage. All banks usually have investment accounts. So you can do it, but the fees suck. So it's not so good. A discount broker, you have to open an account. It can take some time, but it's a lot cheaper, and it's good. I recommend a discount broker. And we're going to touch more about which discount broker you should use later. So let's think about why now is a good time to buy stocks. And I think this goes back about what Warren Buffett said before. You know, you buy stocks where everybody else does not want to buy stocks. And my thesis is that coronavirus is temporary. Is it going to cause a lot of damage? For sure. Can it last 1 year? For sure. I don't know how long it's going to last. And it could be very well that we have not reached the bottom part, but the prices are already good. And if you believe the world is going to be a better place in another 2 years, you're going to do very well with investments right now. That being said, I'm not saying take all your money and put it in the stock market right now. Right now is a good time to buy. Is it the best time to buy? I don't know. Nobody knows. If someone tells you that now is the best time to buy, he doesn't know what he's talking about, because nobody can know the future. We still don't know what the implication of coronavirus is going to be around the United States, on small businesses. This is all things that we cannot foresee right now. We can assume, but we don't know. What else? We already know that China and Korea are doing a lot better. I know China are lying, but let's assume they're doing a lot better. And what else is very important that is happening right now that has never happened before in history is that central banks are like the ECB. Every country pretty much has a central banks, and what central banks are doing that it took them a lot of time to do in 2008 is to put a lot of money into the system. They're not waiting like they did in 2008. I think a lot of people have seen the movie The Big Short. I think a lot of you guys have seen the movie The Big Short. And this time around, the banks are not waiting to see if Lehman Brothers collapses or any other bank collapses. Now they see problem with mortgages. They're printing an unlimited amount of money to support the system. So without this, the market would have crashed a lot. But because the central banks are printing a lot of money, it's helping the system and it's holding the system from collapsing. And now we're going to have to see if this money is saving the system or it's not enough and the market will collapse more. So as we said before, the best time to invest is when there's blood in the streets. And I think if you guys have been following the news, I think if you follow what's going on in New York right now, you know now everybody is in panic. And the best time to panic and the best time to buy stocks or to invest is when everybody else is in panic. And we assume the panic is temporary. You know, if aliens came to Earth, I would not say that because we don't know. They might destroy Earth. But because we're talking about coronavirus, we assume that a year from now, a year and a half from now, we're going to have a vaccine. The world is going to get better. So now is a good time to invest, in my view. I did a series of investment blogs on Instagram 2 weeks ago or a week and a half ago, where I said, you must buy now. And since then, the stock market has gone up 20%, which is a lot. So you don't have to rush in right now because the stock market has gone up a lot. So I'm going to go to the next slide. So, you know, throughout history, and now I'm looking throughout 10 years that have passed, there was always something going on, you know. In 2011, we had a problem with the US that the rating agencies said the US is a dangerous place a little bit. So the market sold off. You can see it over here. You can see it in 2011. You can see in 2015, we had the Ebola virus and we had a collapse in the Chinese stock market. And if you can see, the main theme is one thing. And what can we all see? At the end of the day, humanity wins and the stock market goes up. So unless you do not believe the stock market is over or the coronavirus is going to destroy our economy as it is, the stock market at some point will go up. And as you can see here, you see, all these falls have been only a good investment opportunity. So is now a good investment opportunity? I think it's a good time to start investing. So this is my thesis, because humanity always wins. So let's continue. Okay, so now we're looking at the stock market. And remember, we spoke about this before. When I say the stock market, I mean the top 500 largest companies of the US. Every time someone in the newspaper says, hey, how is the stock market doing? They mean, how is the S&P 500 doing, or the 500 largest companies in the US? Why is the stock market considered the S&P 500? It's important to remember that some of those biggest companies in the US are actually the 500 biggest companies in the world, most of them, you know, because those companies are international companies. You know, companies like Facebook, Google, they're American companies, but they're not really American companies. So S&P 500, as you can see, has fallen a lot. And for a good reason. Corona is no joke. But I think at the end of the day, you have a lot of technology companies that are changing the world, and they're going to do a lot better than now. I mean, I think 2 years down the road, I think companies like Disney are going to be a lot better than they are now. The moment the parks open and everybody goes out, doesn't matter if it's going to happen in another half a year or it's going to happen in another year, it's going to happen. And whoever invests now is going to make a lot of money. The same thing happened in 2008. Everybody said in 2008 that the world will never be the same, that the world is over and humanity finds a way to win. And people that invested in 2008 made a lot of money. And I can tell you that if you're going to wait until things are better, the stock market is already going to be up a lot. So the time to make money is when there's blood on the streets. So once again, is this now the best time to buy? I don't know. Probably there could be lower and better prices, but it's a good place to start buying. I have a lot of friends, a lot of idiots, some of them on this chat, that I told them to buy the stock market before it jumped 20%. And they told me, oh, no, you don't understand. It's going to fall further. And yes, it could be that the stock market at that point would fall further, but it was already good prices. Could it be that you're later on down the road going to get a better price for a company? For sure. Nobody knows where the bottom is, but it's already a good price. So that's what I'm saying. And I can tell you one thing from my own experience. I don't know when the bottom is going to be. You don't know where the bottom is going to be, and Warren Buffett does not know where the bottom is going to be. This is why you have to buy companies at good prices. And if prices get even better, buy more, as long as you believe that the world is not ending. History has shown that if you buy good companies at good prices, you will be a winner over time. So let's continue. If you have any questions, feel free to ask. So once again, so you decided you want in. You say, you know what? I want into the stock market, but it's complicated. I don't know what to buy. I don't know how to buy. I don't even know how to open my account. So let's touch a little bit about how you buy. And what you're going to learn right now is that it's very easy. It sounds difficult, but it's very easy. So let's touch upon it. What I would recommend to you guys is to buy what are called an ETF, exchange traded funds. Exchange traded funds are like a basket of stocks. They exist. There's around, I don't know, 10,000 baskets of stock from anything you can imagine, between beauty companies baskets, cannabis company baskets, and the two most popular ones are the NASDAQ and the S&P ETFs. So how it works is the moment you buy an ETF, you're buying a basket of stocks. So you're diversified. You're not risking buying just one stock. Let's say, for example, I think Disney is great. And I say, you know what? I think Disney is the best company, and I buy only Disney. And tomorrow what happens is that the CEO of Disney, we find out that the CEO of Disney has been hiding billions of dollars and the stock crashes. That's terrible for me because I lost a lot of money. Although I thought it was a great company, my risk is very high. If I hold one or two companies or stocks, because companies and stocks are the same thing, then I have a lot of risk. So what I recommend for you guys is to buy an ETF. An ETF is a basket of stock, and the moment you buy it, you're diversified. The fees on most ETFs are very small. So you diversify yourself with a very small fee. My favorite ETF that I think you should invest in right now is the NASDAQ, also known as the QQQ. So why the NASDAQ is because the world is going through a huge transformation and technology companies are kicking ass. You can see that technology everywhere. You can see technology in cars, if you're talking about Tesla. You can see technologies right now. Look, all the stock market crashes and companies like Zoom, where we're right now having the conversation, is making all-time highs. The stock just keeps going to the sky. Why is that? Because technology is changing the world. And technology is going to be around in 2 years, 3 years. And those companies like Google, Amazon, Facebook are going to make a lot of money in the future, no matter what kind of future it is. So yeah, so what I'm saying is ETFs are a very good option for you. Now, it's very easy. Once you open a trading account, all you have to do is buy one ETF. So you just go, and for example, I'm going to write now in the chat, and you tell your bank, or you just do it on your own, you buy QQQ. QQQ is the ETF for the NASDAQ, for the technology companies. So the moment you bought this QQQ, you're pretty much holding the entire tech companies in the US, all the big tech companies in the US. And you don't need to start buying one stock or two stocks. You don't have to start selling. They're doing everything for you. You have this 500, you have this stocks, and that's it. So there's not a lot of work for you. You buy, and all you have to do is to buy when people are scared, and then over time buy more and average down. So this is how you buy. It's not complicated. You open a bank account, you tell your bank, look, I want to buy the QQQs, or I want to buy the NASDAQ ETF, and that's it. You don't need to look on it on a daily basis. You actually, it's better, the less you look at your investment, the better. Because over time, this is probably going to be you. So let's assume we're here now. In a year or two, you're probably going to be here again. So it's a good time to invest. It's always a good time to invest. And one of the main reasons that it's a good time to invest is, what are your alternatives? Money is always moving. If you told me, look, I have an option to buy a house and I can rent it out and get 10% per year, I would tell you, go and do that. That's a good option, but that's not an option. If you told me I can leave my money in the bank and get 7% per year, I would say, great, do that. But that's not an option right now. What's the only option right now is, to buy good companies for a cheap price, because there's nowhere to put your money. So that's the problem right now that you have with what the banks are doing. The banks are doing this intentionally because they want people to buy stocks, to buy property, to invest in businesses. So what they're doing is they're lowering the interest rates to push the economy forward. When the interest rates is low, money is very cheap. You can go now to your bank and get a loan with 2 or 3%. I would recommend people go take loans. I did it a couple of weeks ago. I said, go to your bank, take a loan for 3%. You can buy companies that are going to give you a dividend of 5%. And, and while you wait, the company's value is going to go up. So there's not been a lot of times in history that's been better to buy stocks. So let's continue. Single stocks. There's a lot of good single stocks. I really like Disney. I think this is a great company, and I'm sure they're going to be better with time. You can buy Google, you can buy Facebook. The thing is, starting to buy stocks, you have to understand more what you're doing. You're taking more risk because you're less diversified. So buying stock, it's good if you want to start doing a lot of homework. And if you want to buy individual stocks, I'm going to go back to what we said before. You have to do your research, and the best way to do research is to see what other people that are very smart, and this is all public information, are doing, and then just look if you like how they are thinking and copy them. And as I said before, if you buy individual stocks, you risk concentration. So it's enough that two of your stocks had, some bad things going on and all your money is going down. So that's the bad thing with buying individual stocks. So a lot of people I spoke with before about my favorite ETF. My favorite ETF is over here. It's called ARK. ARK is managed by a woman that does a very good job. They have a very good research team. And as you can see, over the last 5 years, if you invested with ARK, you would have done around 27% per year. Very good return. And what does it mean? We said before, what does it mean when you buy an ETF? When you buy an ETF, we said before, you're buying a basket of stocks. But it's very important to know what you're buying inside your basket. So for example, here we have ARK. Here we have the return over 5 years, over 3 years. And this is all these companies that ARK are currently holding in their ETF. So the moment you are buying ARK ETF, You are buying all these companies. Here in the first row, it tells you what percent of the fund ARK holds of what company. So for example, ARK holds 10% of the company in Tesla. I think you all know Tesla. Tesla is the car companies and they do battery companies. It's a company that's changing the world. Another company that ARK holds is Square. Square deals with online payments and merchant payments. Very good company. So I'm not going to go over the companies. You see, they're also all the Amazon. So it's a very good way to diversify. The manager is a very good manager. She's going to be buying and selling stocks on your behalf, so you don't have to do anything. You just buy this and you hold. And if you think the stock market has gone too high, you can just sell the fund. That's it. And when the market comes down, you can buy the fund again. For example, I am an expert with stocks, and even I, 2 weeks ago, bought this fund because I said, look, I'm not going to start buying Tesla, Square, all the stocks. I'm just going to buy this fund. And the moment I feel the market goes up, I'm going to sell it. So that's a good example. Over here on the top, you can see ARK Research. And I recommend every one of you register to this newsletter. What ARK does is they're very transparent. They're issuing a newsletter every week or every 2 weeks of all the stocks that they hold. Remember, stocks and companies and shares, it's all the same thing. So they do a newsletter, they're going to send it to your email, and they're telling you, oh, well, look what's new with Tesla. They're now building this new thing. Look what's new with Zillow. They're building this new thing. So this is a very good way, not only to invest, but also to educate yourself. ARK is very good at educating. You see, they're very transparent. They're not trying to do things behind your back. On the contrary, they want you to see exactly what they're doing. So over here, you have the newsletter, and I'm going to continue. Once again, if you want, you go to your bank, you tell them, I want to buy ARKW over here. You can't see it because of this thing. But you have ARKW or RK, they have a few very good funds. And you just go to your bank and they're just going to do it for you. So you're just going to tell them, I want to buy this, or you can do it on your own. It's very easy. Take your time, learn the platform. I swear it's not going to take more than 1 day, and you're going to have a tool for the rest of your life to work with. So let's go to the next thing. 1 second. Okay, now I'm going to continue. So one of the worst thing and one of the worst questions I get asked from people is, I want to buy stocks now because I think they're going to jump now. When we invest, we want to take the speculating or gambling out of the business. We do not want to buy stuff for the short term. If you buy something for the short term, it's like going to the casino. 50% you're going to be right, and 50% you're going to be wrong. You have no advantage. You should never buy in order to sell something 2 or 3 days later. You should never buy if you need your money in the next month. You should only buy stocks if you know you can put your money on the side for at least 6 months, 1 year, 2 years. Because over the long run, good companies are going to do well. But over the short run, who knows? For example, if you come and ask me, yo, what is Lionel Messi going to do in this game? I say, I don't know if he's going to score or not, but I can promise you that if you're going to bet with me that Lionel Messi is going to score a lot of goals over 3 years, I will bet this anytime. So if you take a long-term bet that companies are going to do well, especially when you take bets in bad times, when companies are cheap, you're going to do well over time. And Warren Buffett says that all the time. So next slide. So once again, buying for a few days is speculating. You're not investing and you're not doing shit. If your friend tells you, hey, buy this stock, I heard it's good, it's going to go up, tell him good luck. Not interested. This is not how you make money. You make money by investing over the long run. The moment you buy an ETF or a company, you become part of a business. It would not cross your mind to join let's say to join like a food business and then sell your part after 1 week. It doesn't make any sense. It's crazy. So I can tell you that I know a lot of people that trade over the short term. They take short-term trading ideas and they just lose all their money. Never use leverage before you know what you're doing. And never, 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 never touch Forex and never touch binary options. This is the best way to lose all your money. Don't do that. I haven't met anybody that succeeded in making money in these kind of things over the long term. All this commercials that you see, hey, come do $1,000 per month, and you can see a picture of a doctor that does it. It's all bullshit. You're just gonna lose your money. Do not touch Forex, do not touch binary options, and do not touch any of that shit. And do not invest for short term. If you need your money in the next month, do not touch the stock market. Because let's say you thought it's gonna go up 20%, and now it went down 20% because, you know what? The US cannot stop Corona. What are you gonna do? Now a month passed and you have to take your money out, but now it's worth 20% less. So now you're fucked. So this is something to think about. So some recommendations for you guys. First of all, I recommend people to watch Jim Cramer on YouTube. Jim Cramer explains a lot of stuff in a very simple way. He's probably not, you shouldn't probably follow all his advice, but it's a very good way to explain concepts in a very simple way. So he's a good teacher. He's not a great investor, but he's a good teacher, and you can learn a lot. All you have to do is put Jim Cramer over here, Jim Cramer on YouTube. Just search for things that have happened in the last day, and then you can just follow what he says and what he does, and you can learn a lot from it. It's very good. When you become better, you're gonna understand that he's not the best investor, but you can learn a lot from him, especially when you start going on with the stock market. You can learn a lot. What broker to use? We're going back. So if you're not using the banks, I recommend using Interactive Brokers. You just write this name in Google, Interactive Brokers. They have in every country, they have an office. So if you have problems with English, you can call the home office. The home office takes a little bit of a markup on the fees. So it's better to open it from the main office, just going to this website, and you can call them and they're gonna help you opening it up. I think the minimum investment is $500 or $1,000, but you should discuss this with them. Your home office might have other things. Once again, let's go back to what I recommend. Once you opened your account, all you have to do is type these 3 letters, QQQ, and press buy. That's it. And then the less you look at it, the better. Or ARKW, that's the other ETF. We just spoke about it. And let's see if I have any other slides. And yeah, that's it. So and now you have the chat. Feel free to start asking questions. And I'm going to be more happy than to help everybody. So the chat is open. Ask whatever you want. Let's see. I don't know how to show myself, but if anybody has questions, now it's a good time to ask in the chat. Tai, maybe you can unmute everybody. I don't know what's the best way to go about this. So whatever you think. Okay, let's see. Okay, so let's start looking at questions. I'm going to start looking now at questions in the chat, and I'm going to start answering the questions. So just 1 second. Guys. Unmute yourself, because if not, we can't hear anything. You know what? Tai, leave everybody muted. I'm going to answer questions from this chat. So, okay, I'm going to start. Let me go back to the questions. 1 second. So how you start investing, I gave a good example. Use Interactive Brokers or go to your bank. And this should be very easy. If you're American or you have an American passport, you have some free brokerages like Robinhood, which is very recommended. Now, another good question comes from Or Zabib. Is printing money lowering the value of money? The answer is yes. The more money you have in the system, the less the value of money. And I think what that means is probably that the price of gold is going to go up a lot. And also Bitcoin can go up, although I do not recommend Bitcoin, but it makes sense for this to go up. Why is the price of gold supposed to go up? Because you cannot print gold. You can print money. All the governments are printing money. All you have to do is press the button and suddenly you have $3 billion. You cannot print gold. And gold has shown to be a good investment over time. I can give an example. 30 years ago, it would take 1 ounce of gold to buy a burger, and it would cost you 5 cents to buy a burger. Now it costs $5 to buy a burger, but it still costs 1 ounce of gold to buy a burger. So gold, usually when people print money, like what's happening now, gold is probably going to do very well over time. You can also invest in gold from your brokerage account. So yes, printing money lowers the value of money. Supply and demand. If there's a lot of supply of money, so obviously the value is going to go down. So let's see now. How do you know what's a good price? And that's a very good question. So usually when you look at a company, you look at two things. And this is a very simplistic way to say it. What's the price of the company and how much money the company makes, which is what is called the PE. It's the most commonly used term in Wall Street. What's the PE of this company? The PE of Facebook is 22. Price divided by earnings. Usually when you have a low PE, it means that it's a good price, but it's not true anymore because let's take, for example, Zoom. Zoom price is very high and it doesn't make any money, but people are willing to put a lot of money in companies like Zoom because you see all of you guys are using it and people believe that 5-10 years down the road, Zoom is going to be an amazing company that makes a lot of money. So what's a good price? It's a very complicated question. It's a very complicated question. For tech companies, it's different than for a company like Walmart because another thing you have to look is growth. Walmart does not have a lot of growth, but a company like Zoom has a lot of growth. So people are willing to pay a lot of money for Zoom, even if they don't make a lot of money. So for example, Facebook, you used to be willing to pay a lot of money for Facebook for a little bit of money, but now you're willing to pay less because Facebook is not growing so much. So I'm going to go for the next question. So how do you know what's a good price? Oh, sorry, I'm going to 1 second say something else. And this is the thing. So once again, we said we usually measure a company by the PE ratio, price divided by earnings. But what happens now? Earnings are not really real anymore because you don't know what earnings, for example, McDonald's PE from last month or from last year doesn't mean anything because we just had Corona hit the market. So the PE doesn't mean anything because the price went down, but you don't know what the earnings are going to be. And this is where you have to assume that things are going to go back to normal. So this is a very good question. There's no exact answer. But for example, if you think that companies like Facebook or Walmart or Disney are going to go back to make the same amount of money that they made before, it's probably a good time to buy them now because the price is a lot cheaper than before. It's also very important to mention that what's happening now that did not happen in 2007 and 2008 is that the government understands what's going on and they're printing a lot of money. And when the coronavirus is going to get fixed, all this money is going to go into the stock market and it's going to go into other assets. So this is going to create another bubble because money is free and people are going to take money and invest it in things. So this is a very problematic thing, but probably the printing of money that you're seeing around the world right now and the low interest rates, this is what causes usually bubbles. This is why house prices are so expensive. Not because everybody thinks houses are great, just because they can't put their money in the bank because they get this. So this is why house prices are very expensive because people say, hey, well, I have nothing to do with my money, so I'm just going to buy a house because I don't trust the stock market. Okay. Okay, so another good question. When you say this is a good time to buy shares, do you mean buy the S&P 500 or specific companies? Both. The S&P 500 is made out of 500 companies. So when you buy the S&P 500 ETF or the SPY, that basically means you're buying 500 companies. So it's the same. It's a good time to buy an individual company. It's a good time to buy the S&P 500, which is a basket of companies. Okay, I'm going to share the Guru Focus later. I don't want to touch on specific companies because it's a very long topic. If you want, we can do a follow-up conversation, which is more advanced. But I think if you're looking into companies to invest right now, if you want safe companies, it's companies like Google, like Facebook, like Disney that I said before. American banks could be a good buy here at the lows, like Bank of America and others that that Warren Buffett bought a long time ago, and he's holding them at worst price that you will be buying them. There's a lot of good companies out there, and we can discuss later which are the good companies to buy. There's also Nike, Adidas, companies that you believe that are going to do better. If you want to take higher risk, you can say, look, the US government is not going to let companies fall down like Boeing, like American Airlines. They're not going to let those companies fall, and you want to invest in those companies. The risk that you invest in risky companies, those companies have debt. So what that is, for example, if I buy, for example, Boeing, I'm saying, oh, Boeing is a great company and it's a great price to buy. But Boeing or most of those companies have a very high debt. What happens if coronavirus lasts for 6 months? Those companies have to pay back their debt, so they can go bankrupt, theoretically. So it's more risky investments, but you can be sure that the more risky the investment, the more money you're gonna make if things get better. Just as an example, if you invested in an airline company in 2008, when everybody thought that the world is gonna end, 6 years later, you would have made 12 times your money, 12 times your money. So if you put $10,000 on American Airlines, 6 years later, you would have $120,000. So more risk, more reward. With a company like Disney or a company like Google, you're not gonna make a lot of money. You're gonna make 20, 30% over the next 2 or 3 years if things get better. But with companies like Carnival Cruise Lines that, they do the cruise lines in the sea, or airplane companies, that's where the big money is going to be made. Or oil companies. If you bet on oil companies, also you can make a lot of money, but it's also very risky because those companies have a lot of debt. Now let's continue. More questions. So ETFs and mutual funds are not exactly the same, but some have a lot of similarities. ETFs usually are not managed. For example, if you buy the S&P 500, there's no manager. You just pay a little bit of fees just so they can manage, just so they can rebalance the portfolio. What does it mean? That let's say the S&P let's say some companies went up too much inside the S&P, so they sell and buy inside of it, but it's not actively managed and the fees are very small. Mutual funds, usually the fees are higher. And some ETFs like ARK that we spoke about works very similar like a mutual fund, that you have a manager managing it. Most mutual funds have managers and you pay higher fees because you have a manager that manages it. I like ARK because the fees are not so high and the performance has been very good. So actively managed funds, we just spoke about it, ETFs, it's the same. You can buy an ETF that is managed and you can buy an ETF that is not managed. An example of an ETF that is not managed is the QQQ, which is the NASDAQ, for example, or the SPY, which is the S&P 500. They're not managed. An example of an ETF that is managed is ARK. What do I think is better? I think it's good to buy the QQQ And I think it's also good to buy ARK. It's your choice. Everyone has its pros and cons. Both are good. Okay, so once you bought a stock, how do you know when to sell? And the answer is pretty complicated because, if this Corona thing did not happen, the stock market would have continued to go up, So when is a good time to sell? Let's say you need that money, or, you see that companies are becoming expensive. What does it mean that companies are becoming expensive? You're going to read on the newspaper everywhere that companies are expensive. Once again, we said expensive is when the price and the earnings are in a normal situation expensive, like we had before this crash. Companies were expensive. They were trading in a PE of 19, 20. And once again, we said a PE is price divided by earnings. So the price was very high and the earnings were not great. So they were very expensive. So it's going to be, if you when is the time to sell, you have to follow, or you have to learn on yourself what is an expensive. You can at least look on Twitter, just so you know, on Twitter, me also, I wrote a lot of things before this crash that stocks are becoming very expensive, and it doesn't make sense. You will see that a lot of smart people, a lot smarter than me, are writing that stocks are expensive. So that's probably when you want to start selling stocks. Yes, so there's definitely an ETF for gold. It's called GLD. I'm writing it right now. It's called GLD. That's an ETF that's like the gold fund. It's kind of supposed to track the gold. If you want to have leverage, when I invest in gold, I invest in the gold miners, because if the price of gold goes up, the gold miners are going to do a lot more money than the gold, because they have a lot of gold in the ground. Usually when gold is in the ground, the companies value it a lot less than the value of gold currently. So if you believe that gold prices are going to go a lot higher, you can buy a gold miners ETF, and my favorite is GDXJ, which is more speculative, or GDX, GL, and GLD, and gold. So you can buy those. You can definitely, silver also has, I think it's SLR, but all you have to do is write gold ETF, or Google is investing is very easy. You want to find the ETF of gold, you write ETF gold in Google, boom, you have 10 answers. You want to buy an ETF of silver, you write ETF silver, you get an answer, no problem. You just have to put a little bit of 10, 15 minutes to read which one you want to buy, and that's it. It tells you everything. Can I write, which one? I think you're saying. Oh shit, okay. So can you guys, whoever's sending a message, please just make sure you put it in everyone. Thank you. Yeah, so for gold, this is kind of like the gold, silver, if I remember the tickers correctly. So yeah, no worries. Okay. So does the ETF ARKW and QQQ pay dividends? So ETFs do pay dividends. ARKW does not pay dividends, and the QQQ pay dividends, but very small. You do not invest in the QQQ for dividends. Remember, what is an ETF? They just hold a basket of stocks for you. So if a stock gives dividend, they're going to give it to you. They just hold a basket of stocks for you. Okay, how can you find out if a company has debt? That's a very good question. You're going to have to research the company. There's a lot of public information. I'm going to put more stuff about this later. And yeah, you have to look, and you have to, usually what you want to do, and I assume if you're asking if a company has debt, and you can just Google the name of the company and write debt, you're going to have an answer. Or you can read the reports of the company. You can go to their website and look at their presentations. But this is a more advanced thing. This is like something that an investor would do, and it's a very good thing if you want to do it. But usually it's public information. You write Google, you write debt, how much debt Google has, how much debt Disney has, and you can get it in a very easy way. Okay, so for the S&P, if you want to buy the S&P, is SPY. So that's the SPY ETF. So yes, if you invest in a company that goes bankrupt, you get zero. Not It's very hard for companies like to go bankrupt now because the US government does not want them to go bankrupt. But no, so what Zina, Zina asked a question like, if she invests in a company, will it go bankrupt and delete your, well, it will delete your money. Your money is going to be gone. This is what happened to, for example, to Bear Stearns when you saw the Big Short, Lehman Brothers, they all went bankrupt. Shareholders got nothing. So here's another question from Becca. So you say the less you look at the ETF, the better. So then how often would you check them, and how do you know when to sell if you're not looking often? And what is a good percent increase where you should then consider selling? Well, it's not about percent increase. It's more about like the PE ratio that we spoke before. When the market become expensive, you're going to read it all over that people are saying that the market is expensive. Look, it's a very good question. In general, Warren Buffett says you should never sell your stocks. And I can tell you that Warren Buffett did not sell any of his stocks before this crash. So if you don't know anything, the best thing to do is buy more and more stocks over time. Like this, even if there's a crash, you're going to be buying at lower prices. But if you're not in the stock market, you should not start to buy and sell all the time. You should hold over the long run. I can promise you, look, if you bought stocks 5 years ago, 10 years ago, even this Corona thing wouldn't matter. So in a general thing, you want to buy stocks and you want them, hold them forever, or for at least for a long time. When do you want to sell them? It's a hard question that you have to follow the market for that, but you don't have to follow it on a daily basis. For example, now that I buy a stock, especially after this Corona thing, the best thing is not to look at it for the next 2 years and just buy more, no matter if the price is higher or lower. Is it sensible to get a loan for 20K for 0.68 to invest? I would say 100% yes. Like if I had very little money and I could take a loan for this amount, I would definitely do that, because I think, companies like Disney and good companies are a very good investment. Another thing that you can do is you can take a loan, if you can take a loan for 1 or 2%, and buy a dividend ETF. So what happens is you buy the stocks at a pretty cheap price, and the dividend that you get from that ETF is going to cover your interest that you took on the loan. So that's a very smart thing to do, because you can say, look, no problem, I can take I can take a loan with 2%, and I can buy the dividend ETF that now gives me 4%, and then I can pay off and just wait. Even if it takes 1 year or 2 years, I'm paying off the loan anyway, so it doesn't matter. So I think it's a good idea, but I'm not going to tell anybody go and take a loan. But if you ask me if I would do that, I would for sure do that. Do I invest for private people? I used to invest for private people. I do not do that anymore. I prefer no responsibility and to travel around the world. So I give recommendations. I do it for free. I do it on Twitter. And I also tell people there when I think people should sell stuff. For example, in February, not before the fall, but when the fall started, I said, for example, on Twitter, and if you follow me on Twitter, you've seen it. I said, look, if you get out of the market now, you would avoid any crashes, and the market really crashed. And I told everybody on Twitter that it's time to buy 20% ago. But once again, sometimes I'm wrong. But you can start to see when things are expensive or not. I think everybody should open a Twitter because you learn a lot of stuff there from very smart people. Me not being a smart person, but there's a lot of smart people over there. Do I choose to invest in specific sectors, industries these days? Yes, I do. So that's a question from Dan. And I think the technology sector is changing the world. And over the long run, the technology sector is going to do very well. And I think the QQQ, the NASDAQ or ARK, for example, that also invest in the future, is going to do very well over time. If you look at stock markets around the world, I don't have this in front of me, but if you invested in the German stock market 7 years ago, you would have made this amount of money. You would have made nothing. If you invested in most stock markets around the world, you would have made nothing. You know, all this thing about emerging markets, about Asia being the next big thing, it's all bullshit. The next big thing is technology. Technology is going to rule the world. There's going to be two types of people in the world. And there's going to be people that work in technology, and there's going to be people that entertain them and feed them. There's nothing else. All the other industries are going to go to the garbage. Yes, you know, there's also going to be real estate, but all the other industries are going to disappear because robots are going to be doing all the jobs. So I think anything with technology is a very good investment over the long run. I think, by the way, also solar energy is very good investment, solar energy. There's also ETFs for that. There's ETFs for everything. I'm going to publish after this conversation my favorite ETFs and maybe a few single stocks that I like so you guys can see. And we're going to go from there. Okay, another question from Zina. Let's say I want to invest in a stock which is at very low point due to COVID-19. But if I take a 5-year look on it, it went already from year to year down. Could the stock still be a good option to invest in? I'm a little bit confused. Sina, can you say again the question because I don't understand exactly what you mean? 1 second. Gold ETF is GLD. Yes, Michael. Okay, so this is very important. Greta is asking, what are the dangerous parts of investments? And let's say what it could be is that, you know, we are all wrong and, you know, COVID-19 is going to last longer and the US prints a lot of money, but it's not enough. And what's going to happen is companies are going to start going bankrupt, like small businesses are going bankrupt right now. And this is going to lead the world to maybe a depression or a recession because people are not going to be buying things. So it doesn't matter how good the company is. If people are not buying things, it's going to be very hard for companies to make money. So it could be that I am wrong and things are going to get worse from here and companies are going to start getting bankrupt. And real estate, you know, what happens with banks? Banks give loans for real estate, but what happens if people don't work? They can't pay back the loans. And once again, you have everything collapsing again. Is that possible? It's a very low probability because the banks are printing money now. So a total crash is probably not very likely, but we could be entering into what's called a recession or a depression, which means companies are not growing and people are not spending money. So there is risk. There's always a risk for investment. Nobody guarantees that you're going to make money. Nobody can guarantee that. So you can lose money. Take into account when you invest, especially in the short term, you can lose money. So it could be that we're missing something and know this coronavirus is going to get worse and people are going to get reinfected and we're not going to find a cure. Everything is possible. So don't take it for granted that if you invest now, you're going to make money. It's not guaranteed. Yeah. So, you know, the moment you buy gold in dollars, you can buy gold. This is a bit more complicated, but yes, you're right. You can buy gold in different kind of currencies, but this is a little bit more complicated. So I'm not going to touch on it now. And Michael, you can ask me later. Yes. So once again, just to repeat that, Udi, if you want to buy gold, you can buy an ETF. You can buy a miners ETF to get leverage, or you can just buy an ETF of gold. I'm going to post this later. What do I think about E-Trade, Charles Schwab? Avichai, yeah, good options. The best one is Interactive Brokers, but if you use E-Trade or Charles Schwab is also a good option. I think the fees are a little bit higher, but that's it. There's no big difference. Why do I not recommend Bitcoin? So the thing with Bitcoin is speculative. It has no value. The only reason Bitcoin has value is because, you know, I buy it because I believe someone else will buy it at a higher price, you know. And let's say, for example, now all the computers in the world or whatever stop working, there's no more Bitcoin. You can't do anything with this. I think if you want to invest, you should buy gold. And a very good example was, you know, the market crashed in the last 2 months, and everybody said, you know, Bitcoin is supposed to protect you against market crashes and against money printing. And it has proven to do the opposite. Bitcoin has fallen down with the market and gold has gone up. Gold has proven to protect you, while Bitcoin has proved not to do that. Can it be that Bitcoin is going to be in 20,000 in 5 years from now, or 100,000? Maybe, I don't know. Could it be that Bitcoin will go to zero because someone invented a better option of Bitcoin? Yes, that's also possible. So Bitcoin is speculative. You know, Bitcoin is a gamble. You can gamble, but just know there's no fundamentals for your gamble. Bitcoin does not have any intrinsic value. Warren Buffett says always stay away from Bitcoin. It's a scam. I'm not saying it's a scam, but you know, it's not a real thing. Yes. So you buy it yourself. It's very easy. You just, or you can tell them, you can call. So the question is, approaching Interactive Brokers means you buy the stock ETF yourself on the platform. And this is what Raz asked, and the answer is yes. And the thing is, you can also call their assistants and say, hey, look, can you please help me understand how I want to buy this ETF? Can you please help me buy it? And they're going to help you. They're very busy now, though. So this is one thing. Okay, I get a question from Lisa. I bought a few stocks last year, and it's down right now 50%. Should I still hold? Should I still hold or sell? Well, you know, if you're holding stocks or you're holding stuff, this is not the right time to sell because the market already crashed. You know what? The market already crashed 20% and your stock is already down 50%. It's probably not a good time to sell. I think this is panic time, and you're never selling panic. Okay, so another question is, so the Dow Jones and the S&P and the Nasdaq have gone up 20% since I recommended them. Should you still buy them? The answer is yes, but I would not put the same amount of money as I would have put 20% ago because things have gone up. The Nasdaq is now 10% from where it started the year, you know, so it's not gone down a lot. So it's a hard question, but in general, you know, the alternative from buying a stock is to hold cash, and cash in the bank loses you money because there's also inflation. So should you buy the Nasdaq now? I would start buying now, but I would not put all my money. I would wait to see how things go. This is for, okay. I don't know. So Camille asked, I use Trade Republic. I don't know Trade Republic, but yeah. ARKW, yeah. So ARKW, QQQ is kind of the ETFs that I think you should invest in. Okay, so Mark asked, the volatility of the Nasdaq is quite high. What volatility is good? Mark, this is a little bit more complex question, so I can ask you, we can discuss this later. So let's not discuss this here. Is TD Ameritrade good to use? Yeah, all the discount brokers are good. All these American discount brokers, they also protect 20, I think until $500,000 or $250,000. So if something happens to the broker, your money is still secured. So yeah, so Mr. Kiepenberg is asking, what should be your investment time horizon? And your investment time horizon should always be for the long run, not 1 year, not 2 years, 15, 20 years. When Warren Buffett buys a company, he owns it forever, or, you know, at least things that are new happen. So when you buy stocks or ETFs, you should think about the long run, because over the long runs, good companies make more and more money. The Corona, or, you know, the crisis in Ukraine or the oil crisis are all temporary things. Over the long run, good companies are going to continue to make money. My Twitter name, I'm going to write later my Twitter name. Okay, I get asked about I don't know how to call them, dash, excellence, investment houses. I would not put my money in any manager just because they take a lot of fees. I would not do that. I would just buy an ETF. Ideally, you open your own account so you don't have to pay maintenance fees and other bullshit that the banks or the, you know, the investment houses charges you, and you just buy an ETF. None of those ETFs, none of those investment houses or smart people beat the ETFs. Buy ETFs. Do not put your money with smart people. Over the long run, ETF beat the smart people. The broker I recommended, Becca once again, is Interactive Brokers. Okay, so for example, I think an ETF, one share is like, it depends which ETF you're buying, but the prices is very, the entire point of the ETF is to make it very cheap. So one share of ETF could be $20, $23, and it owns many stocks, but a small portion of many stocks inside the ETF. So you can start with $20, but as I said before, you know, I think the minimum that you can pay for buying stocks is $5. So I would not start to buy, if you have an account of $1,000, it would be stupid to buy 10 stocks because that's already $50 that you pay just to buy them. So that would not be very smart. Use one ETF, you have many stocks, and you just pay one commission. How do I recommend to get exposure to oil? Roy asks. First of all, you have an oil ETF that has done very badly. I personally am not a big fan of oil. I like alternative energies more, but there's a lot of ETFs that deal with oil. And I'm going to put it later, Roy, so you know you can see which ETF would be a good investment in oil. But it's very important to understand that over the long run, oil is going away and alternative energy is coming in. So it's very important, you know, to remember that. Less cars that work on oil, more cars that work on electricity. What do I think about leverage ETF? I think if you have a small amount of money and you want to bet, you know, and let's say the market falls a lot, I think it's a good gamble. But, you know, leverage ETFs have their own problems. So if you don't need to lose leverage, it's better. But if, let's say, the market fell and you have a little bit of money, a leveraged ETF is not a bad idea. Elad Noti once again asked me, what's a good time to exit? In general, it's never a time to exit. You want to hold stocks forever until they become expensive. How do you know when they become expensive? You have to do a little bit of work. There's no shortcut here. Okay, so Mikito is answering, if you have $10,000, and I think this is a very good question, how would you spread the money? How many ETFs? I think 1 or 2 or 3 ETFs is good enough because, as you can remember, an ETF is already spreading the money for you. So if you have $10,000, 1 or 2 ETFs, and you're good to go. Okay, but very good question. So how long after the smart people buy a stock, it shows on Guru Focus? So it really depends when they buy it, but every quarter, a hedge fund has around 2 weeks, the moment the quarter ends, to say everything they're holding. It's not something that they want to do or they must do that. Every hedge fund must say everything they're holding. The only problem is they don't have to tell you if they're holding options or stuff like that. So it could be that I'm holding $1 billion stock of Disney, but I'm also holding some defenses with options, and you're not going to know that. So take that into consideration. And also, when they sell the stock, you're usually not going to know until the quarter comes. So Doron asked, is it cheaper to buy a stock or is it cheaper to buy an ETF? And it's the same thing. It's like buying a stock or buying an ETF. From a commission point of view, it's like $5 or whatever. I think it's $5 for 1,000 shares, but I don't know exactly. So it's kind of the same thing. Gold ETF and silver ETF, I'm going to touch about later. I'm going to put down later. Okay, we touched this. No, so ETF, the ETF is not a mutual fund, but they work sometimes in similar ways. Some ETFs, are open-ended, so that means they can get as much money as they want. Some funds are closed-ended, which means you can only invest money if people are coming out. So it's a little bit different. I think ETFs are better. So specific companies we're not going to touch right now. Once again, when you talk about stocks, all stocks have like a three-letter kind of three-letter, what we call ticker. We call them tickers. So every company has a ticker. For example, you ask me, hey, I want to buy Bank of America. What's the ticker of Bank of America? So for example, Bank of America is BAC, but that's just an example. Delta Airlines is DAL, the ticker is DAL, but you don't need to remember that. Okay, 1 second. We can go down to see if there's any more questions. Ooh, okay. No, I don't know what DFI is, Sebastian. Yeah, so for example, when you buy your ETF, you can just Google the ETF name and it's going to tell you. You can Google, for example, any ETF you want. You just Google it, and it's going to tell you exactly what holding it has. All ETFs have to tell exactly what they're holding. What is a leverage ETF? For example, you can buy a NASDAQ ETF that is 3 times the ETF. So you buy $10,000, and if the NASDAQ goes up 10%, the ETF is going to go up 30%. If the NASDAQ goes down 10%, it's going to go down 30%. So that's what a leverage ETF is. So, okay, Freya, you asked me about, Freya is asking me about tech stocks with dividends. And usually tech stocks do not want to give dividends. The good tech stocks do not give dividends because they're saying, I have better things to do with that money than give it to you. And it's your own interest that I will take that money and instead of give it to you, I'm going to invest it in a higher rate of return. So most tech companies do not give dividends because they prefer to invest it in new technology so they can grow and make you more money. Mikito, okay, so you're asking about alternative ETFs. I'm going to write the alternative. I really like the solar ETFs, but these things can get hit because of the coronavirus, because things are going to get delayed. But until the coronavirus came along, alternative energy ETFs went up a lot every year. And they're going to go up in the future a lot because, solar panels and wind power is the future. Is Buffett the #1 investor? For certain things. If you want biotech, probably not. Look, but Warren Buffett is a very big investor. If Warren Buffett cannot buy good small companies, he can only buy very, very big companies, which is a problem for him, because it's very hard for him to find very good companies that are already very big. I think it's better to follow hedge funds that have smaller companies because they have better, they can have an edge because they can find those small companies that can gain a lot of value. I can give you a good example that we're going to touch. I'm just going to show you 1 second. So there's another kind of thing that I highly recommend, Whale Wisdom. Whale Wisdom tells you exactly what all the smart people are buying. It's even better than Guru Focus. For example, let's see. I can write any fund I want here. For example, let's think about one fund. You're going to have to research. You can just Google who are the 10 best funds, and then look over here. For example, they have the Whale Index 100. So this shows you the best funds and their returns. Let's see if I can find something here. Perspective. So for example, let's see if I can find this thing. So here, this is a good example in Whale Wisdom. First, this Clear Perspective Advisor, I'm just going to take this as an example. All I have to do is I go here and I see what they're holding. Now, very important thing, if you want to copy other people that are good, look what they're holding a lot of. For example, this fund is holding 10% of their portfolio in this kind of holdings. So that means they have high convictions over here. So this is also a very good website. 1 second. I'm gonna copy and paste it. This is even better than Guru Focus. Second, how do I go back to this crap? Okay, so yeah, so this is better than Guru Focus. I think this is pretty good. So let me see the other questions. Yeah, you're welcome. Whale Wisdom. So I just sent it. Yeah, look, there's a lot of good funds. The best way to look which fund is good is to see what they've been doing over the past 10 years or 5 years. Okay, Doron, I don't understand your question. You asked, all your money is in long ETF investment, you are making money, but not liquidity. What do you mean liquidity? Please explain to me. Becca, yeah, that's what I would do. That's what I would do, but I would not rush to buy now because the stock market. So Becca is asking, if you have $10,000, would you split your money equal between QQQ and ARK? The answer is 100% yes. That's what I would do. My pleasure, buddy. Thank you. Let's see. Look, I'm not gonna, you should not put all your money in stocks because you should obviously have money to live. So, like I think in stocks, you should put money that you have extra, that you can invest over the long term. You should not put it into things that are short, that just to gamble for a month or two. I would not recommend that. No, Nicole, the answer is no, because what happens if the stock market goes down 20% in the next 3 months and you need to take money out? So I would say no. I would say put in the stock market money that you're only able to close for the next 2 or 3 years. I would not put in anything that I need to take out right now. I would recommend, if you can, to do a margin portfolio. Like this, you can leverage your money, because if you have $10,000, you can buy more stuff. So when you open an account, especially in interactive brokers like Sina is asking, I would do a margin account or a portfolio margin, anything that gives you margin if you can. Any other questions? Okay, so I'm unmuting everybody if someone wants to ask a question. Okay, everybody can hear everybody. So if someone wants to ask a question, if not, please mute yourself. Guys, anybody ask the question or we're good?
Next session.
Over. Anybody else have a question before we log off?
I think you need to mute everybody, but give them the option to unmute.
So I muted everybody. I don't know how you do the hand thing, but if someone wants to ask a question, please type the question. Tech ETF QQQ or ARKW. This is the two tech ETFs I recommend. Of course, that's the point of life. Oh, don't you know how to write in English? My pleasure, Lisa. My pleasure. And my favorite ETF is ARK ETF. Freya, I will let you know more about this stuff. Do I recommend you as citizen put it in an IRA? You know, the problem with an IRA is that it takes time to take out the money, but if you're saving for the long run, you know, until you get old, then yes, because of tax benefits. Yeah, be careful. Mikito, the answer is no. I would not jump right now and put all my money in. I would start, let's say you have 80,000 to invest because you need 20,000 to live. I would start with putting right now 25% of my money in the stock market. And then I would wait to see what's going on. If it goes up and things get better, I would buy more. If things get a lot worse and stocks become cheaper, I would buy more. But I would not go all in right now. Andres, so do I think the stock market's gonna crash? Look, in the past, all this kind of things that have been similar to this had crashes that followed, another 20% from where we are. But you know, every time we have a crisis, it's different because this is not a financial crisis. This is a humanitarian crisis, and that might lead to a financial crisis. So, yeah, we're recording this presentation for sure. Do I expect the market to fall? I don't know. I don't have a take on it. Could they fall? Yes. Could we have already seen the bottom? Also yes. So I have nothing intelligent to add here. And if you meet someone that tells you what is going to happen, you'd probably not talk to him, because I haven't met anybody that knows the future. Nicole, I don't manage any money. I used to manage money and I don't do that anymore. How do you deal with the tax implications of an IRA? I'm not the right person to ask about taxes because I'm a citizen of Panama and there's no taxes there, so I can't help over there. Okay, Michelle, for sure. Do I short the market? I do it with options, but this is another story. I don't want to get into it because I think it just is going to confuse people. If we do a more advanced session, we can discuss shorting the markets. But if you're new, do not gamble, do not short the markets, because the markets over the long run always go up. So do not short the markets. You're not a trader, you're not professional, do not take gambles. The only gamble that you should take is a long-term investment perspective. But this is a bit complicated. I will have to explain it some other time, but I think you can read about it and I can send you material to learn about options. But I recommend nobody uses options until you know what you're doing. When is the next class? I think we can do something next week. So we can follow up on this conversation. You guys can learn about ETFs, gold, and you can write down your questions. And then we can have another session next week and you can have more questions. If I have to summarize is don't jump into the market now. If you have stocks that you already lost money on, don't sell them now. What you do with the market is you go down, you go in slowly, especially after the markets have gone up at 22%. It's not the good time to jump in. And always remember, the best time to go into the market is when everybody else tell you, don't touch it. It's going to zero. That's the best time to invest. The more panic people have, the better is the time to invest for the long run, because people are panicking and they're selling stocks at any price without logic. Thank you, Stav. I appreciate it. Oh, so my Twitter handle is, one second. So this is my Twitter. I wrote my Twitter downstairs, down this part, and you know. Okay, yeah, we have a recorded presentation. I'm gonna post it somehow. I need to think how I do that. And I'll be more than happy. If someone wants a recorded presentation, please send me a message, ideally on Facebook or something like that, so I can send it to you. And Nicole, what I'm saying is, I just did. This is my Twitter account, sorry. Oh, shit. Camila, what did you ask? Can you ask again, Camila, what your question was? Okay, that's fine. So, yeah, I think, how can I see the chat? Yeah, Barak, question? Yeah, I got for sure. See you next week. So, Nikito, for basic knowledge, the best thing you can do is, I can't believe I'm saying that, but listen to Jim Cramer on YouTube. Oh, okay, so people can write on my screen. I think gold over the long term is a good investment now because governments are printing money. So I would say gold is a good investment. Second. Just 1 second. Yeah. Okay, do we have any more questions before I finish this chat? Will you see me in Burning Man, Sebastian? Yeah, of course, we're going back home, no? There's gonna be no Burning Man because of Corona though. Okay, so guys, thank you. It's been a pleasure. If you have any more questions, you can send me on Facebook or whatever, and see you next week. Remember, come for next week with questions, start to read, and we can continue next week. Oh, you're welcome. Everybody's welcome. Oh, now I can see everybody. Hi, guys. It's been a pleasure.